Welcome back, Rent to Retirement investors. Today, we're going to be talking about a topic that we haven't really had a lot of discussion about, but is important for an overall financial blueprint. We're very hyper focused on real estate investing, as you all know, but more importantly, we're focused on real estate, but really all aspects from a financial savvy sort of investment mindset. We want to make sure that we're helping our investors build a comprehensive approach into getting them to the financial stability that they want to achieve for their families long term. Real estate is just one avenue of investing that obviously we're very biased towards, but there's many other aspects that need to be considered and many other investment opportunities from a tax perspective, from an income perspective, that are important to incorporate into an overall financial blueprint and plan long term. So today we're going to be talking about life insurance, which is something that some of us may or may not have a policy set up or have looked into, but it's really an essential piece of our overall financial blueprint, not only to protect our families in the hard-earned income that we've worked so hard for many years to protect, but actually from an investment perspective. There's tax advantages alongside things like IRAs and 401ks that people aren't even aware about. So even if you have a life insurance policy set up, you want to make sure that you have the most appropriate insurance policy set up based on your lifestyle goals, your long-term goals, and your investment goals. And so this is something that I think a lot of people overlook or really don't understand completely. And by no means are we going to cover everything today, but this is just a little bit of a fundamental basis on what are the benefits of investing in real estate. So today we have Reid, who is one of our partners, who is an insurance specialist. He's a principal and fiduciary of Presidio Financial Group. He's a chartered financial consultant and investment advisor with a background in life insurance policies. And he's another real estate investor alongside of us. He's helped our investors with building strong financial blueprints, specifically building out a life insurance policy that makes sense for their long-term goals. So Chris, welcome to the show. We appreciate you taking some time to jump in. Just give us a 30-second overview of you and your history.
I graduated Issaquah High School up here in the state of Washington in 1998, went right into the Marines. So not kind of your typical route to financial services. I did that. When I got off active duty, I ended up in the desert a couple times. And while I was over there, I applied to and went when I got back to Gonzaga University. So I graduated from there a while ago, worked as a police officer for about 6 years. When I was in the Marines, I actually was putting half of every paycheck into Janus mutual funds. So I left the Marine Corps with about $20,000 in the bank. So I've kind of always been tooled that way. So starting a financial planning practice where I could actually really help people, that aligns with my values, and it's something that I'm pretty decent at. So that's kind of my background.
Absolutely. That's great. Thanks for sharing that. And the whole reason we want to connect with you, is because for all of our investors and for ourselves, we want to build the most appropriate team to be in line with our clients in terms of what are their long-term investment goals. It's important to have all the aspects, all the professionals on your team to make sure you have the most appropriate plan in place. This is true of real estate specific attorneys and CPAs, real estate advisors, property managers, insurance specialists such as yourself. You really got to have the right team to make sure you have the right plan in place for yourself. Just like with working with a CPA, you need to have a CPA that is familiar with all the tax benefits of real estate, but more importantly, familiar with what are your goals long term. Very same thing with life insurance and anyone else that you're building in your professional network. You want to make sure that you have the right people advising you that are actually listening to your long-term goals and offering advice of what are the advantages of doing different strategies that you may or may not be aware of. So let's dive into it a little bit just about life insurance. Why is that important? Why is life insurance something that everyone should have? And how can we use it from an investment perspective? We've kind of broken it down into 4 bullet points. And Chris, I'm going to let you talk and kind of run through these after I highlight them, and we can talk to them a little bit more in depth. It's very obvious that life insurance is important from an insurance perspective. In the unfortunate event that the income earner is not going to be able to earn the income and provide for their family needs to be financially secure and taken care of. Same sort of thing would be true of a disability policy for someone that has an accident or an unfortunate event where they're able to not earn income. I want to use the example because I used to be an optometrist. I'm still licensed, but we have a friend of ours that was an optometrist that had multiple private practices and earned a high income for his family, but he was very engaged in his practice and built patients up for many years. He was in a car accident where he broke both his hands and was unable to perform, eye exams with his hands. He did not have a disability insurance policy, and so basically, with a blink of an eye, his income potential is taken away. And it's very unfortunate. But these are the things that we really need to take the time to plan about and think about for the future, for protecting our families, but then also from an investment perspective. So that's the easy one about life insurance, is just protecting our families long term. In addition to that, though, what a lot of people are unfamiliar with is some of the investment benefits and tax benefits. So life insurance can be a tax shelter. It's one of the few things that is actually written into the tax code as a tax shelter for tax-free wealth accumulation. You can have the option to be the bank with a life insurance policy and still provide the financial benefits, still have the tax advantages, but also leverage against your policy while still accumulating wealth over time to actually borrow against to invest in other tertiary asset classes like real estate. And then you're kind of double dipping. This is something that's been around for many, many years, but not a lot of people are familiar with the fact that you can leverage against your policy and be your own bank. And then you also have market fluctuation protection, where you kind of have a guaranteed minimum floor where the stock market can go all over the place, but you at least, you get to ride those highs up, but then you at least have kind of a medium to limit your losses potentially. And that's very attractive because there's really nothing else out there that can offer that. So let's maybe, I'm going to turn it over to you and talk about some of these 4 bullet points that we just reviewed, and kind of just give us your perspective on how we can use these things to set up our clients for, a strong financial future.
Yeah, that's a great intro. The first part is it's the easy to explain and understand, but getting people to act on it is always difficult. As a financial planner, all the best stock portfolio in the world, or the best real estate portfolio in the world, or all that stuff has to be funded with something, and that's from your income. And so, like your friend who's the optometrist, it's actually not even accidents, really. It's cancers and things like that most people file disability income claims on. Things like depression, cancers, those type of things that people you don't see coming down the train tracks. Those types of insurances are there meant to essentially have an insurance company protect those things, your life and your income, in the event that those are taken away from you. At the end of the day, survivors need money. That's just how it is. If your income goes away because something bad happens, your survivors need that paycheck. Then for an investment guy to turn around and make them whole and make sure that their future looks the same, even if you're not there.
Yeah, you told me something that would kind of solidified. This is a while back when we were talking about, what is the most valuable asset to your income potential? And it's not your job. It's not, it's you, it's not your asset, your real estate. It's like you are your most valuable asset. So you need to protect yourself and your income potential.
Yeah, exactly. So, and that's what the pure insurance portion of any insurance plan does, is just make sure your family's taken care of. And then what a lot of people don't know is that almost every insurance company out there, life insurance company out there, basically has 1 floor of people writing life insurance contracts and about 10 floors of people on Wall Street trading advanced markets type of bonds and options and that kind of thing. So the reason that they do that is just there's an old type of life insurance that has gotten better and better and better over time, where essentially you're covered by life insurance like everybody understands, but then they also manage and invest money on your behalf. It's extra money that you give them, they build it up in your account, and then later on in life you can leverage against that, take a loan out tax free, never pay the loan back, and use that money for whatever you want, and then your cash account will continue to accumulate whatever interest is paid on it. So just as basically an unrestricted tax shelter, someplace where Uncle Sam really doesn't either, they either aren't involved or they don't want to be involved, because every congressman out there has their own big fat cash accumulation policy, that's my suspicion. It's just like a big old Roth with no rules to it, essentially.
Right. Well, you have limitations and contribution limits on certain retirement plans and things like this for a tax shelter. This is an area that has a lot more leniency and flexibility. It's been in the tax code forever. This has been a secret of the wealthy, building, tax-free accumulation for many years, that, upon withdrawal or, paid benefits, there's no tax benefits associated with that. And, if it's set up appropriately. So this is an area where, just to review, with a life insurance policy, you get the protection for your family long term. You can build a tax-free wealth accumulation. You can protect against market fluctuations, as well as have the option to leverage against the policy to then almost like double dip. You're still earning interest on the money contributed. You borrow against yourself to then go and then earn, exponentially higher rates of return by taking that money out and investing in other asset classes. Let's talk a little bit about one of the points about market fluctuation protection. How does that work?
So insurance companies just do an advanced type of money management where essentially you're putting a guaranteed floor under your cash account. So every year that it accumulates, you lock in and realize those gains. So the stock market can go down circa 2008, the housing bubble can pop. And while everybody else in your 401k and IRAs are going down, 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 your cash account and your life insurance contract actually will not lose any value to the stock market. And then when the stock market recovers, you're going to enjoy a whole bunch of those gains on the rebound. So just as far as setting aside money for future investments, whether it's real estate or kids' college or grandkids or whatever the case is, I'm a big fan of not losing money. And I wish every day in my investment practice that I could do what insurance companies do and guarantee no loss and still make 10, 11, 12% per year during the good years. Like, I wish I could do that because it's just something that you can't do outside of an insurance company. One day, maybe someone will, but until that day, they're kind of our go-to for that safe money, high growth.
That's so crucial that you mentioned that because it's just another tool in the toolbox. As you said, this is one area that I feel very strongly about. And I feel like everyone needs to at least explore based on their scenario of having a life insurance policy set up to protect the family and plan for the future, in addition to these other assets like real estate. And it really kind of melds together with making a good overall comprehensive financial plan for investors. And you're right, there's nothing else that you can have kind of that guaranteed floor to also have the potential of earning those higher interest amounts during the good years, having that floor during the bad years, and then also having the tax advantages. I mean, someone that's listening to this and is thinking about like, what are the tax benefits? Is this like a Roth contribution? What about distribution of that later? Like, how do you compare apples to apples with some of the tax benefits of a life insurance policy long term?
Yeah, a Roth is a good way to describe it. From a contribution standpoint, you put after tax dollars in. So Chase bank account money just goes in like you're paying a life insurance premium. It's already been taxed, it goes in. But then that cash account is going to grow up in there. They're going to credit interest every year that the stock market's good. And it's going to be your principal plus interest. And then on distributions, that's where it is, again, a lot like a Roth, is you're going to turn around and loan yourself your own money. Again, those loans are forgiven on death. You never pay them back. And then you take that money and you do something else with it. You fund a real estate investment or like I said, a kid's college or something like that. So now you've got money working on both sides, because then your interest bearing account inside the life insurance contract is just going to keep accumulating interest over time. From a taxation standpoint, just like a Roth, with again, the difference being that like multiple high income earners in a family, right? People who max out their 401k in January. The IRS restricts how much money you can put into all these other tax advantage savings vehicles. They do not really restrict how much money we can put into one of these. We just end up pulling some levers with the insurance company to make it look good from it from a compliance standpoint. But yeah, they're pretty unrestricted on how much money you can put in. There's no age 59 and a half, pre-distribution penalty. Loans are all forgiven on debt, so you never pay those back. It's really advantageous from that standpoint. There are some drawbacks, just like any investment, right? So there's pros and cons to everything. So this is just one of those things that fits nicely in the toolbox from a tax-free way to save money.
Absolutely. That's fantastic. And I mean, there's so many different policies and ways you can structure this contribution amounts based on what your goals are. And that's obviously far beyond the scope of what we want to cover today. I mean, the main point is that this is something everyone should be thinking about. And also, if they have current plans in place, they should be reviewing those. This is not something you just do once and forget about. I mean, so many people want to do that. And I get it. Life gets busy. That's why 401ks are so attractive. You just contribute and forget about it. All right. Let someone else manage it. But just like with a real estate investment or anything else really financially that we're putting our money into, we need to consistently review how the performance has been and making sure that we're having the right plan in place that is tailored specifically towards our investment goals and criteria to set ourselves up in the place that we want to be long term, because goals and financial planning is dynamic. Your goals today are not going to be your same goals in situation where you're at 5 years down the line. And then in addition to that, anything you can do to reduce the tax liability that we're going to have now or later. We all know that taxes aren't on the decline, over time. And so it can be rather painful when you actually run the numbers and look at, the wealth that you're working so hard to build, what you're taxed on it now and what you're going to be taxed on it later. So this is such a cool thing to actually learn about. I mean, this is kind of like an aha moment for me when we were exploring these different policies and looking at, all these different benefits of being the bank, leveraging against it, having that tax-free accumulation, and just simply protecting our families' well-being long term. So if someone wanted to learn more about, what their current policy looks like, making sure that having a review of that to make sure it's the most appropriate policy for their situation and their long-term goals and criteria, or if they wanted to just explore a life insurance policy or any other type of insurance policy, and go over some general financial advice with you, what does that consultation process look like? I mean, are you spending time with each individual to go through and break down their specific income, their goals or criteria? I mean, that's pretty rare actually in the insurance world, that most people are just kind of spoon fed a specific plan and not really taking into consideration what their goals are. I mean, what does that process look like with you?
You have to start with your needs. What are your income needs? If you can't go and earn an income, that's it. That's an income or a paycheck protection insurance, essentially. Then a life insurance needs goes into immediate needs and ongoing needs. What is our primary mortgage amount? How many kids do we have? How far are they from college? Because somebody young with new kids and all those college plans, like their planning is very different than somebody who's 65 who now has long-term care concerns. So really, really drilling down and finding the correct amount of insurance, whatever that is, right? Rather than just pulling a number out of thin air. Hey, I think I'm worth $2 million if I die. Okay, well, great. What if you're worth four? Right? What if your family has become accustomed to one standard of living, or you don't want your wife to have to sell a house? That deep dive on that planning to really hone in and find out what we have to do from an insurance standpoint is very important. And then the second part is just making sure if you have something already, congratulations, don't pay insurance companies more money than you need to. If company A is going to charge you $50 a month and company B is going to charge you 40, we're going to company B, right? Don't throw money out the window that you don't have to. That's on the simple side. On the more complex side, if you are putting any kind of money whatsoever into a cash value policy, I 99 times out of 100 can tell you it's probably not doing what you think it's doing. The guy who got it for you is probably a good person, but they're pretty complex.
It's just understanding what your options are. Same thing with real estate investing in all the different markets. We work in a handful of different markets. It's overwhelming. It's daunting sometimes when you're thinking about, what is the best policy. I mean, that's why an investment advisor in any sort of investment really that truly has your best interests at heart and fully understands your situation is so important to work with, because there's no one size fits all. And you really need someone that understands what your long-term goals are, what your current situation is, and what you're trying to achieve financially and lifestyle-wise to best advise you on what are the best options. I mean, it's just overwhelming if you're starting to look at all the options out there. So we're such a strong proponent of what we try to do for our clients is real estate, but real estate is just one avenue to build financial security and independence over time. The name Rent to Retirement, it's about building for retirement, but overall just financial education. And that's why we meticulously choose the partners that we work with, such as professionals like yourself, to ensure that our clients' interests are taken into consideration. And we're working, from a comprehensive approach to ensure we're taking all the necessary steps we need to build generational wealth, to limit the tax, burden that we're going to have, because taxes are the biggest, expense we're all going to have through our lifestyle, and make sure we're taking the best action steps on all the different investment options available to us. So Chris, appreciate your time, kind of giving us this fundamental overview. We didn't go into any real specific details, but obviously that's on a very individualistic case-by-case basis with anyone that wants to have a consultation with you. We will include in the show notes and send out information about, how to schedule consultation. It's simply someone just needs to email you via your calendar link, set up a consultation with you where you can spend some time to review their overall goals, review any current policies that they have in place, and really talk about what are their options and what are their best options based on their goals and criteria. So we'll make sure to include that information. We appreciate everything you've done for ourselves and our current clients, and taking out the time to join us today.
Yeah, absolutely. It was great.
All right. Take care, Chris.
All right, take care.